This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders. I'm Scott Norse here with your Forex Report. We are wrapping up the week. It's Friday, May 16, 2008. Well, a topsy-turvy week today ended in a huge dollar sell-off that may have blindsided a great number of traders. It's hard to say we were shocked to see the greenback decline today, especially after consumer confidence fell below 60 to a 28-year low. However, we are admittedly very surprised that the buck got hit as hard as it did in late morning hours. We had already seen quite a bit of action by 10 o'clock when the final plunge began, and logically expected the market to settle into a range ahead of the close. After all, in recent weeks, we have seen the dollar fight off sellers in the midst of more damaging data than we saw today. Nevertheless, we can't argue with the intense selling pressure that overcame the greenback today and where that may leave us early on next week. Furthermore, oil continued to surge to new records this week, and gold has also begun to rally again. Those factors are widely seen as dollar negatives and will undoubtedly serve as hurdles in the dollar's expected rebound. The technical front has been as difficult to follow this week as the fundamentals. We've seen daily closing prices on pairs such as the euro-dollar that send a strong signal to buy or sell, but never follow through. The one reliance we have had with this pair, in particular, is the consolidation pattern on the 180-minute chart. Other pairs such as Aussie dollar have also thrown us curveballs, reversing on the back of very solid technical indications. This kept us very active and alert in our trading. Moving forward, we should expect the greenback to continue weakening early next week, given today's end-of-week plunge. However, looking back at the last 5 days, it seems as though we saw the dollar strengthen early on and dollar weakness later in the day. We can only expect such a random pattern to continue for so long, but this does contradict an expectation for dollar weakness right out of the gates next week. Guess we'll just have to play it by ear. Now to the big picture. We've spoken very little in recent months about the relationship between gold and the dollar. The two are considered by some to be competing currencies since the US dollar is no longer backed by gold. Additionally, gold is viewed as an alternative to the greenback when it's declining. In the last 2 months, gold fell nearly 20% from its new highs above $1,000 an ounce, and oil has become a much bigger focus. While the weak dollar is partially responsible for rising oil, oil rising does not necessarily lead the dollar lower. On the other hand, a rise in gold is believed to be indicative of dollar weakness. That said, we must also note that gold is an inflation hedge. Making a long story short, a continuation higher in gold above $900 an ounce, where it now trades, should greatly concern dollar bulls. The 50 and 100-day moving averages for the commodity are now touching near $915, which should act as resistance in the near term. However, a breakout leaves the door open to about $950. While there are no guarantees the inverse relationship will be restored to what it once was, this is something we need to follow closely in coming weeks. When gold is moving sharply higher, it's probably not the best time to look for long dollar positions. Just the opposite is true of days when gold may be falling fast. While we will do our best to keep you informed of important developments in oil and gold, as well as their effect on the dollar. Until next week, enjoy your weekend. Take care.